One of the biggest issues I see in intra-session traders, it is the ability to read the lower time frame liquidity. So in today's video, as you can see on my screen, I have a trade that a lot of our members of our community got into, which is a Euro USD buy position. And the ability of this trade is to understand and identify the lower time frame inducements, and therefore during this video I'm going to be explaining to you the ability to be able to read inducements in control and how to switch from a build-up onto the inducement and onto the expansion, in this case of the trade that happened during London session. So because it is an intra-session trade, I'm going to be focusing into the M5 time frame. So the M5 time frame is going to be what I'm going to be calling our house, our home. This is the place where, yes, you can go into the M1, and we're going to be going into M1 in a second, but M5 is the first point in price where we can start identifying and gathering a lot of information for our benefit in this trade or case idea. We're going to understand why we're looking for buys, okay? One of the most common issues that I do see on traders, it is also lack of understanding of the intraday cycle. How can I actually have the correct frame to either buy or sell? So in this scenario, we want to put emphasis on a few things. First of all, even though we are on the M5 time frame, everyone can see what basically happened for the London session the previous day, okay? So before I go into today's trade, which is the London session, I just want to give you a quick tip on how to identify high probability scenarios for the next day. In this case, what I can see in here is the London session. As you can see, this was the window of time. London session gave an expansion move. Right? After that expansion move, for New York session, we were running important liquidity areas. Do you see how this basically was a run of liquidity that pushed lower? And as we can see, after that run of liquidity that we're gonna get now deeper into the candles, we're gonna see how after this inducement in price, then the New York session, we see how price gives a push to the downside, mitigates a demand area, gives a pullback, and that pullback, very important point in price, fails to keep going lower. As we know, if that inducement had enough orders or was powerful enough, or there was like actual real orders behind that move, that should have continued to the downside a bit more. But as we can see, that didn't happen. And what we got is an expansion now to the upside. So we can see how this inducement failed, and therefore we actually created a push to now higher moves in price. So now why is this so important? Because now we've identified what has been happening the previous day where we were trading. Let's say we take a loss, let's say we took a break even, whatever is the situation. But now we're gonna start the new liquidity cycle, which is gonna be framed for the next day. And this is why I was trying to give you this little tip, because it's extremely important to understand. This will change completely how you can frame your day, because now that you know that this inducement failed to keep going lower and therefore push higher, there is a high chance that the market will still push higher the next day. Now, very importantly, there's something I'm gonna have to consider into the next day. I am a trader that trades London and New York session. Therefore, Asia, it is a very important frame for myself. And I always analyze how the liquidity is in Asia to see how I can capitalize into my London trade. I can't control what happens in Asia, right? So the only thing I can do is wake up earlier for my London session and see what happened in price. So I'm gonna give you a second tip on how to know that this was gonna be a probable move again to the upside as an expansion. When I see price that has created a new push, as we were saying, and therefore failed to keep pushing lower, there is something very important to have in price. It's an objective. I mentioned this a lot in all of my videos, but an objective in price is one of the most important things, because every entry needs an exit, and that exit needs to be either liquidity or a mitigation. Those are the two options that you can use on your analysis. So no matter what, if you're gonna exit, for example, either in this liquidity point in here, which I'm gonna mark with this arrow, either you were gonna exit on that liquidity point, or let's say you wanted to exit on a mitigation area in here. So no matter which is the objective in price that you're gonna choose for your exit, and I can do a separate video a bit more precise about it, the most important thing is that I can get a pullback first into my demand area if I want to go into those objectives. And this is the term that I created that is called the efficiency of the pullback. Is every time that you have market structure, how can I use that market structure efficiently in my favor to always go with momentum? So the key of the efficiency of the pullback is to validate or invalidate certain areas and make sure that we're always gonna go with momentum in our market structure. So as we can see in here, one of the reasons why this was key for this exact trade is because we can see how the market creates a push, but then it creates this instant pullback into demand. That instant pullback into demand is what I call the efficiency of the pullback. And it's because the market now has switched to a bullish momentum point in price, because we could see the failure on this area. We can see how price failed to create low and then pushes up. But now, quick tip in here. As you guys see, I'm putting a lot of emphasis around this because it's extremely important to be trading with momentum. Let's put in a scenario that on the Asia session, we had a rally to the upside. That will change completely the frame of the day. And that's the difficult part about trading, that we really need to stay very adaptive and reactive to what price is doing, and therefore have models to what price can show depending on the condition of the day. I know this all can sound as Chinese, so I will highly recommend to stop the video here maybe and rewatch these last 20 seconds to make sure you take notes and try to digest this information, because this piece of information has fully changed my trading to be able to trade always with momentum and have accurate exits and be able to trade with market volume. But as you can see, the market didn't create that Asia push to the upside, therefore already arriving to our points in price that we catalog as our objectives, and we get the efficiency of the pullback. So that in place and seeing that instant retracement after those higher highs being created, I'm gonna mark the higher high here with a blue circle. Those ones were created, and seeing that, which we're gonna call now inducements in control to the downside, we're adding a lot of probability for my buying positions. That's why it's so important, okay guys? Very important to do what I just did on the first part of the video, but now stick with me, because now we're coming also to the very important part of inducement in control, having a liquidity cycle, and how we're gonna actually execute to have a high probability entry and a precise entry to get this amazing risk to reward, which it was a 1 to 3 and 1 to 10 trade, which is a phenomenal trade, of course. So after this, let's get now step by step of what happened. Why do I look into this low, for example, and I don't look into my POI being here, and all of this stuff that can also confuse you as a trader. So first thing, let's get into the Asia creation of liquidity. It is very important, and you guys will see our market here with some red squares on price, is to see how the inducement is being on control. Inducement is the key character for price to move from a point A to point B, and therefore it's extremely important to see it in price and see that order flow being created. So in here on the M5 time frame, what I'm seeing is a very nice inducement in control scenario. After this liquidity is being generated to the upside, it's also being generated to the downside. So we can see how price induced first to the upside. That will be a strong sign that price will want to go to the downside, because it's left the liquidity first on the below side, not on the higher side. After that, we get a push down. We can see how we get a test in price of this block, and then we go down. After that push down, anything that comes to the upside is going to be our inducement, and therefore we see happens the inducement and continues with the flow. Now, this is not things that I will emphasize you guys to trade. This is just understanding the nature of price by point A to point B, point A to point B. We can see that then price does the same thing all over again. There's a push down, then there's a test into some sort of retracement, and that's another push down. Now, what is the complication here for a lot of traders that also confuse in lower time frame market structure is that they all see these areas that created the last push as the important one to hold structure, and they can see how they basically get induced all the time. One time here, one time here, and we're gonna even have another one here. Why? Because if you can see, price always needs an inducement, right? So price will always create important pushes in price, creates a test, creates another push, and then comes back to grab liquidity and go to the downside. You can also take this inducement in control thing into your higher time frame positions, which could be, again, another video, but now I'm just emphasizing this inducement in control for the lower time frame. And this is a beautiful example of how price actually moves majority of the times with the order flow. Now, all this inducement in control and during the Asia session, this is what I call a build-up in liquidity, is where price is just generating liquidity for potentially taking it out in London. So that build-up on liquidity is also coming nicely in place with my complex pullback or my retracement in price into demand areas, because I am looking forward that if I had a retracement into demand to have a potential expansion to the upside. So anything that comes now into a form of bearish pressure is going to be just a retracement in price. And as we can see in here, there is a key point or element that we start to get not just an inducement of Asia. You guys know in this channel I also have a video about medium inducement versus Asia low or high inducement, which is extremely important to understand or ensure a longer moving price. So in here we not only induce the Asia low, which is sitting in here, okay, so we not only induce the Asia low, we also grabbed internal medium inducements, as we can see in here. And now you're gonna think, okay, why then is this medium inducement that I'm gonna put here with an arrow, why is that one important? Well, let's highlight what I said at the beginning of the video. As you remember, what was the key element that we were looking at? One of the key elements that we were looking at is that this was potentially bearish pressure after the inducement. Then price mitigated and then pushed lower, but it couldn't break. That's a massive sign for myself, because if we speak from a bearish scenario, this should have actually created new lower lows, but it failed to do so. The key word here is failed to do so, because when I see that something fails to do so and then comes back and tests price, and we can see how this creates a massive push to the upside, this block in price will have a lot of orders resting. So this aligns perfectly with what I call also my liquidity cycle. Everything needs a build-up, needs an inducement, and needs a mitigation for me to validate the POI. Okay, I just don't randomly validate POIs because I think it looks like a smart money position or like a block or like a refined FC or whatever you want to call it. I validate them because I know that if I follow a sequence and I follow time, price will have a high probability chance of reacting into my demand or supply area that I can see orders resting. So in here, we can see how, again, price taps in here and then into my liquidity cycle, I have a build-up. This will be my inducement in price, aligning pretty nicely. And my mitigation will be farther of this block of orders. You guys can see it is a decent size. In here, we have an area of around 8 pips stop loss, which is a decent size for Euro USD as a POI. And we can see in here why also is going to act as a POI. As a POI, I don't want an area to be 55 pips stop loss on a Euro USD. I want an area to be around 8-10 pips stop loss. So then with my lower time frame confirmation, I can reduce that area by 20, 30, 40%. So a POI is just an area of interest where I want price to engage with, so I can then look for further confirmations to then be even more precise and optimize even more my stop loss, because I know reducing my stop loss by 30% can have a massive impact in my ROI per trade. And now in here, we're gonna jump now into M1, okay? Do you need to be into the M1 time frame directly from the beginning? Well, you can, okay? That's completely fine. I just like to give you guys the example of M5 because I think it's more a time frame that is a bit more user-friendly at the beginning and it has a bit less of noise when you guys are still wanting to learn further about lower time frame confirmation. So something that you can use also as a tip is stay on M5 until the moment of the execution. That's when you can actually start to train yourself into M1. So in here we can see, again, it's super clean, the order flow that we had in this scenario for Euro USD on M1. We can see how price again was doing these inducements in control. We can see how price is definitely going in this area. And now we have also something that is particularly important. What happens here in price? We can see how this was my push from here, okay? And then price created a push to the downside. Now, very importantly, we did a medium inducement from this area, but it's out of time. So I need to re-engage with price on the open of the window to see if that could be a potential entry. What I can see is that we create a very nice pullback, we make the inducement, and at this point in price, a lot of people start to look for buying opportunities. This is where they're too early or they're a bit early into the movement. They start to think that this is their bullish push to the upside and therefore they should chase price as this being the one of the move. But as we know, this is just a liquidity cycle from an M1 perspective, induces something, and this at this point there is a very high chance that you will even take this low. And that's why it's very important to just react to what price is doing. So if we go now candle by candle into the M1 execution, you guys will see that basically now we're opening the session. Now, where am I sitting right now? Am I creating any inducement on this open? I'm not, right? So I need to stay just waiting, because as of right now, my first thought process would be that we might potentially even induce one more time this low, okay? Because we're still on a bearish time frame, and we might induce one more time in our key time window to then go into bullish moves. So I just need to wait and see what's actually gonna happen in price. That's my open of the session for London. We can see how price basically comes in here. We should not engage in price. We should still wait. Yes, we have equal lows in here, but price could very easily come here, make a pullback, create a new low, and that's when actually goes to the upside. So we need to be slowly identifying if it's worth a shot or not, and I think it's not worth a shot. In here, we can see how, okay, from here, price is starting to change character. So far, we can see that yes, we didn't take the low, but yes, we did take enough liquidity. And you guys are seeing a failure in price. Failure in price is when this area here, it was supposed to create lower lows. It fails because after running that liquidity, changes character or changes the momentum after the inducement. And therefore we can see bullish price action coming into a very important area in price. Remember, this area is not a random area. It's an area that we can speculate that there's gonna be high probability chance of being orders because it was a failure in price before. Point in price, failure, and then move up, price tested, create the structure to the upside. This low will have a lot of orders to continue its flow to the upside. And remember, right now we're just very deep into the M1 price action, but if we're gonna look for a buying position, we need to have an exit. And the exit is the objective that we were also speaking at the beginning of the video. Now let's get into the confirmation part. Okay, now we're seeing the change of character. Now, should I enter directly? Is this something that we can just go and enter like that? I think in this scenario, no, price actually flew to the upside, not giving like a good risk to reward perspective, and we just need to wait for a pullback. Of course, if it happens, sometimes you will see that price flies without a pullback and therefore you couldn't enter. So I have ways to enter like that, but in this scenario we couldn't. What we can see in here is something pretty interesting. Here is also a psychological game. This is something that I struggled in the past, where you will see price just creating that first pullback and now you're eager to enter. You're starting to feel that you're gonna miss the move, and then you see this move going from here. Let me put it to you. From here made a pullback, right? And then goes to the upside. This was on the past such a bad FOMO for myself. Okay, I used to just watch price and be like, okay, it's just gonna go without me. Should I then market execute? Should I then put a limit on these areas? I don't know, like, and I started to doubt a lot. But after so much study of price and my backtesting scenarios, all of this for me is just extra confirmation at this point right now. When I see something has tested my area, okay, and then has created a chance of a little higher high, as you can see, a lot of people will confuse that with market structure. For me, it's just the beginning of my confirmation for the lower time frame. Remember, I always want an inducement. Do you see how price, okay, you remember how in price, we've seen it here on the past, of course on a bearish scenario, but do you see how basically on the past, you see how we always had a push, a test, and then induces back. And then we had a push, a test, and then induces back. So what do we want now? Well, we want a push, a test, and then price to induce back. And if that happens, I'll be buying, because it's the same thing that was happening with inducement in control to the downside, but now already will be for my execution perspective, not just understanding the order flow, but looking for a position for myself to enter the market. So again, same principle that you're seeing with inducements in control, and now from here, what's happening? Well, I'm getting the test, right? In here, then I'm getting now the inducement. It was a bit deeper in price, but it's completely fine, as you should always cover the low. And then from here, you should expect price to go up. Okay, so from here, same inducements in control, now of course to the upside, and we should expect now price to go for at least a 1 to 3. So in 1 to 3, we'll be paying ourselves the first partials. How long it took, guys? Or is taking? less than 2 hours, okay? I have an average of 30 minutes to an hour and 30 minutes to hit my first TP, okay? And this is also very important for you guys to study it in price, how long it takes for you to hit your first TP, because they will give you also a lot of like calmness when you still see price moving in towards your first take profit. So first take profit took here 2 hours. My average is 1 hour and 30 to 30 minutes, but still inside of like, I think, a healthy range. And now the next TP, it is a 1 to 10. Now, as I said, you can actually still go, and this will take a bit more of knowledge to understand this order flow that was happening here. You can see equal lows, inducement on the open of the New York time, and then price can highly predict to go still higher. So in here, again, you can close your position on a 1 to 3 and a 1 to 6, 1 to 7, or you can go just for the last liquidity point. As you're seeing, like exits, POIs, liquidity, that could be like another extensive video on itself, probably something that I cannot explain on 20 minutes, but you can see here how basically price is actually going towards the magnets or the objectives that we were setting at the beginning of the video, as it's extremely important to have them in price, because when we're looking at the left, we're looking for areas in price for it to go either into a POI or a liquidity point, okay? So in this scenario, we can see ends up hitting the 1 to 10, towards that, of course, also with the help of the New York volume, and that's how you can see price reaching its objective. So back to M5, our house, you can see how basically price ended up taking that liquidity on the left that we're marking at the beginning of the video. And again, you can actually close your position on POI areas, or you can look more for these points in price. I look more for these points in price because I fully understand why price could be going to that level. But if you want to close it earlier, I also don't think it is like a bad habit. It's like a very good exit plan itself. And then from here, every exit can be a potential entry if you know, of course, what you're doing. And in here, even in a situation like this one, this led to also a very nice inducement in price to then rebalance to the downside. Now, being an intra-session trader is extremely efficient if you know very good your objectives and when to step out of the market. If not, it can also be extremely inefficient, because we can see also how price constantly will make move to the upside, then to the downside. And we know that as an intra-session trader, for it to be traded effectively, we need to know how to capitalize on the right points in price as an entry, but also need to know where to exit very precisely. Because if not, we won't be able to extract all the juice that intra-session traders can. Again, from here, you could actually have a sell position short term after the London close window. Nothing that you should be doing unless you're already extremely profitable. But once you understand this nature of price, you can actually push it to the new levels. So I hope you guys like this video. I think it was a very good dancing with price action, or let's say dissection of price from an understanding of inducement of control, also understanding of objectives in price, how to end up executing very precisely in our London trade. So I hope you guys like these videos. You're gonna see it more. So subscribe, like, see you.